let's get into the conversation with the management of Kirloskar Brothers. The UK arm has won a significant order worth 149 crore rupees. It's an international order. So let's try and understand what this does to the company, what the timeline for conversion to revenue is, and more importantly, how is the order book shaping up and what's the growth outlook for FY27. We've got Mr. Alok Kirloskar, the Managing Director of SPP Pumps Limited and Board of Director at Kirloskar Brothers, joining us on the show. Mr. Kirloskar, hi, morning. Let's start with the latest news piece on the order win. The company's material UK subsidiary, that's SPP Pumps, has secured a 149 crore rupee order from Saipem Offshore Construction. Can you throw some more light on this in terms of how the international order book is shaping up? It stood at around 1480 crores rupees last quarter. Can you give us an updated number there?
The order book has grown substantially because it's not just this order, but we have got a few other orders as well. And order book has crossed over 1550 crores, 1600 crores approximately. But I think, yes, I think the order you've mentioned is in Qatar. It's for the compression platform. This is the third order in a row that we have got for this expansion. This expansion is taking place in the North Field in Qatar, which is quite a big expansion going on right now. The previous ones were Comp 2, Comp 4, and Comp 5. As you may be aware, Comp 4, the overall project was won by a large Indian contractor.
Right, Alok. Thanks for joining in. Meryl D'Souza also here. International order book is now at about 1,600 crores for the company. What about domestic order books then, which stood at rupees 2,470 crores? Can you tell us where does that stand now?
It stands in a similar at a similar level, a little bit higher. As you know, we've made a few declarations about the jobs that we have won. I think you would have seen the Adani order, which was mentioned for the power stations. So it's about 150, 140 crores higher than what it was, based on the declarations that we've made to the stock market.
Okay, understood. Mr. Kirloskar, and now with these additional orders, the company is targeting double-digit revenue growth in FY27. Will these orders make you revise that guidance upwards, if at all?
I mean, that's difficult to say because the markets are tough, as you know, in general at this point in time because of a variety of headwinds. Whether it is the war or it is the general inflationary costs. So I wouldn't want to mention that per se, but yes, I think we are making all efforts to ensure that we can grow because that's really what we've committed to our shareholders.
All right, understood. So, Mr. Kirloskar, can we now conclude that you are keeping your double-digit revenue growth guidance intact for the full year FY27?
I mean, yes. I mean, that's what we've said in various analyst meetings that we want to try and grow in those numbers, and we are trying to make those efforts in the current environment.
Understood, and we'll be watching for that, looking forward to that. But we do understand that the current global market is facing turmoil and that has resulted in a spike in raw material costs for you. But you've also said that you're confident of passing on these cost increases to the customers. Can you quantify how much have the costs risen by and how much have you already passed on? How much are you still planning to pass on?
I think most customers appreciate that a lot of these costs come through, our suppliers, and they come through because of a general increase in costs and inflationary costs. So I would say that in general, over 10% of costs have been pushed through, which customers accept and our customers push on to, their customers who are finally the operators. So I think in general, our customers who are very technical customers do understand, how our costs come about. And they appreciate where the rise is because a lot of these customers, like as an example, the job we are mentioning, which is the compression platform 5, which is with Saipem, compression platform 2, which also we did with Saipem, as an example for this particular job. So in the past, so this is just a repeat order. So they understand how costs have increased. From the previous order to this order, and it's increased for them as well because these are all technical and competent customers who appreciate the cost breakdown. So I would say in general we are able to pass through most of these costs because we are dealing with the level of customer who understands how these costs come about, and they are very technical customers.
Okay. And how much revenue do you generate from data centers currently? And how is this expected to change 5 years down the line?
I would say at a consolidated level, if you look at international consolidated, unlike just the US, which you mentioned earlier, it probably comes down to about 10%. But given how data centers are growing, and given our strength in data centers and our relationship historically with a lot of the data center owners, we expect that we can drive this to at least we should be able to double this in the next 2 years. And that's really what we are targeting, because and when we say double it, it's important to also consider that there are a lot more data centers coming up, not just in the US but around the world. But of course, the US leads the charge by a huge margin. So I would say that that's really our target. We have a good reference till now with all the major operators, and the data center landscape is also changing. A lot of private equity players are coming into data centers because they see it as a utility model of revenue. So we are also sort of recalibrating ourselves to see how we operate with someone who's looking at utility revenues, because that's really what private equities are looking for out of their investments from data centers. So I would say that these are the areas that we are really focusing on.
Okay, understood. So 10% is what your data center contribution is to the international business. You're looking to double that. So sounding good on that front. Mr. Kirloskar, thank you so much for your time and good to be speaking with you today.